So our next guest today is Darren Buma, partner CPA at KWB LLP in Edmonton. Darren, I'd like to say welcome. Thanks for joining us.
Yeah, thanks, Bruce. It's great to be here today.
Yeah. Darren, we've been working together for quite a long time, maybe 15 years plus, would you say?
Yeah, it has been at least that long.
Yeah. And I think over the, 10, 15 years, we've had the opportunity to work with a lot of different clients from KWB that were, old clients in terms of how long they've been with you, or some were newer and some prospective clients, plus we've referred some to as well. And I just wanted to spend some time today for our viewers to sit and chat about what it is that business owners typically are facing in their advanced tax planning as you see it, because there's been a lot of changes over the years. We've seen different strategies like pipelines and others come and go, TOSI rules introduced over that time. So that we can just look at what is the marketplace and tax planning opportunities that business owners have today, some of the most common questions that they have and solutions that you guys have and we have together with you so that our viewers and listeners can actually just understand, whether they've got everything covered or there's some more that they could do. Does that sound good?
Yeah, no, that sounds like a great plan.
Okay. So, my first question would be from your perspective as a CPA, what is the biggest tax issue that most business owners overlook, especially around corporate trapped retained earnings and even, post-mortem tax planning?
Yeah, no, great question. And you alluded to a few things in the intro that we had some great tools in our, or, arrows in our quiver or tools in our toolbox that we could use to help entrepreneurs reduce their tax liabilities. And the Department of Finance has done a pretty decent job of taking a lot of those tools out of our toolbox. So that was part of the desire for us to solve some of the last problems that we haven't yet been able to solve for our clients. And so to answer your question, the biggest issue today by far is the trapped corporate retained earnings that's in a corporation and the inherent liability, the tax liability that's going to come from that, either as a client looks to, extract the capital or, ultimately in a state situation.
Right. And just so that our viewers are clear in terms of what we're talking about, because, before you could do dividends and sprinkle those, with family members and the, tax on safe income took that away. Pipelines, you could do a freeze in capital gains, so that your income rather was taxed as capital gains. And really what we're zeroing in on here is the company's profit. So if you're in business and you're not making a profit, you don't really have a tax problem. If you're in business and you're drawing money out by wages or dividends or combinations thereof, it's the money that you're leaving over after management or dividend bonuses have been paid. And if those have been accumulating for a number of years, 100, 300,000 a year for, 5 or 10 or 20 years, you could have a few $1 million saved up. And in particular, if you're in, some of the hotbeds of Toronto or Vancouver, where real estate prices, up until recently have been on long decade or multiple decade tear in terms of price appreciation. If you owned your land and buildings, then you have those trapped retained earnings problems as well. So trapped retained earnings is business profits or unrealized capital gains, typically on real estate or an investment portfolio or shares in the company's holdings. Correct?
Yeah, no, that's correct. And what's really interesting when we talk to our clients is they know that they've done well. They know they have this accumulation, but in many cases, they don't really appreciate, first of all, that what the liability is. What are they facing, and what their options are. But a lot of them, and because of either past techniques by past advisors or the maybe the lack of knowledge of some past advisors, they don't understand that there are some opportunities to further minimize that tax, and in some cases, almost eliminate it.
Right. And to be, even more transparent and clear so that people understand what we're saying, we're not talking about selling your business and getting a capital gains, lifetime enhanced capital gains election of 1.25 million or, multiplied by however many family members might be eligible for that if the business qualifies, or using a family trust to have that 5 to 10 times over, which we've all seen done with tax lawyers and accountants doing the planning for the business. We're not talking about the value of the business or that lifetime enhanced capital gains election. We're just talking about the money that's still stuck inside and trapped, and what that tax bill is today and what that tax bill will be tomorrow. Because most successful business owners, have been taking money out. They've paid off their house. Maybe they've got a cabin or other investments. They might have done RSPs or have RIFs and might have a non-registered portfolio at their favorite, bank brokerage firm, some in the company, some outside the company. And so we're just focusing on what's still stuck in the company, irregardless of what the people have personally, or irregardless of what those shares of their company might be coming out tax-free. It's what's left over when all is said and done in terms of, and even if they sell the real estate or they sell the business, there's still money trapped inside, typically a holding company or an operating company that we want to zero in on getting that out tax free.
Correct. Yeah, and that's it's a big problem. It's a big number, and before we started working together, that was a problem that we didn't have a good solution for our clients.
Yeah. And the pipeline did help with a lot of that previous, but the pipelines have been dead for 2 years now, right?
Yeah, on the most part, they certainly are. So that's again, this is just one of those tools taken out of the toolbox, and we need to look at what other options are, and our clients need to as well.
Yeah. And so, after working together for as many years as we have with all the different strategies, from the 2010s or 2015s or post 2018s and 24 post 24, uh, what would you say, now that we're zeroing in on this one particular area of working together with, several mutual clients, what's the impact that you've seen with adding these additional tax strategies and improving their, long-term financial outcomes?
Yeah, I mean the impact's actually been quite remarkable, and the tax savings are significant. And what I think is interesting of the word significant is, a $200,000 tax saving to one client might actually be more meaningful and significant to them than a $3 million savings to another,
Yeah.
right? So we tend to not look at this in just overall dollar terms, and well, this one was a better result than that one. Because it really depends on the impact that it has to that person. But what clients are getting is they're getting more retirement income, more money for their estate, that they can transfer to beneficiaries, and potentially more money for charitable giving if that's something that they desire. So these strategies are really converting what would be a tax burden into usable wealth,
Yeah.
and that's really caused clients to rethink their long-term planning as a result of this, because they're now learning that they can keep more of what they built.
You bring up a good point, and it reminds me of some conversations I've had with other clients. And often it'll be, look, I've built up enough, I've put all the time and effort in, I've got lots, the kids will get what the kids get. It's going to be millions. That'll be enough. I don't need to do anything complicated, or I don't need to, plan anymore. I've done that already with my accountant. How would you sort of answer somebody with that type of perspective or attitude about this?
Yeah, I mean, it's an interesting one, but I mean, at the end of the day, I always boil it down for people, and it's your money's, it's either going to go to the government, it can go to a social cause that you're passionate about, or
Yeah.
it can go to your kids, or maybe even two out of the three.
Yeah.
But where do you want it to go? And I have occasionally met that person that believes the government's going to do good things with their money, and believes in all the government support services that we have, and they're happy to contribute in that way. But the vast majority of clients and the entrepreneurs that we work with, when they really stop to think about it, they're like, no, I would love my money to be redirected to in areas that I'm more passionate about, and that's typically family and social giving.
Yeah, exactly. And I think you're right on that in terms of, people might say that initially, But when you put the number in front of them, it's X hundreds of thousands or millions or tens of millions that's going to go to the CRA out of their pot. Say it's 25%, and we can reduce that down to 10% or less. Okay, well, why, if you've worked so hard for decades and you sweated it out and you stressed it out and you leveraged it out and you worked why would you give more somewhere that you don't want to versus somewhere that you do want to? But as I said, one out of 100 might say, yeah, the government can have it and do with it what they like. And that's fine for that individual. I think the
Correct.
other thing that people often kind of overlook is what is that tax bill today if the business owner and or their spouse are no longer with us? What's that tax bill today? And what's that tax bill in, 10 or 20 years? Because a lot of people don't look forward enough to figure out what that number is going to be. And the more you have, compounding at 5 or 7 or 10%, the more it's going to be that tax bill down the road. So where's the money coming from for that tax bill? Because what we see with a lack of planning is that, the business has all this real estate and now there's a, $3 or $5 million tax bill. And therefore assets have to be sold in the company to pay for the death tax bill, if you will, and that creates more taxes within the company. So they end up can lose 50 or 60 or 70% with poor planning, whereas we can get it down, 18, 20% with good planning. And sometimes if they're terribly inclined, right down to zero going to the CRA if the pieces of the puzzle all fit together.
Well,
So
and you're right on that, and most of us aren't going to know when that time's going to come. So the planning is questionable, but having to liquidate a bunch of assets at that time may not be the best time to be liquidating them. I mean, if you even
exactly,
look at the current real estate market and the Greater Toronto area, like it's
yeah,
the next year or two is probably not the time that you would want to be disposing of assets in order to fund the tax liability.
exactly. You're right. Yeah, that's a very good point. So how have you enjoyed our teams working together as we go about sort of collaborating on a client file? And tell us about that from your experience.
Yeah, well, it's been great, Bruce. It's you and Infinity. The process is very collaborative. I appreciate it is fully transparent to our client, and everything's extremely professional. What you guys are doing is supplementing what we're already doing with our client, and that's overall tax planning strategies for them. You're bringing again that piece of the puzzle that we were missing. And it's really resulting in some great outcomes, right? So you're not trying to replace us or even other advisors that I know that you're talking to. It's about adding value.
Yeah, and you're right. It's always been about collaboration because unfortunately business owners will have, their commercial banker, their personal banker, their investment, person. Maybe they've talked to a planner at the bank firm that was offered through the investment side and maybe insurance, or they have an outside insurance and then they have, obviously their CPA, but there's a lawyer, maybe they sat down with a tax lawyer, done a trust or freeze or whatever, but nobody's putting all the pieces together. And then there's really specialized parts and pieces that I think are, often unknown. I would say the most common thing that I see is business owners have been good at growing their business in whatever industry they're in. And they'll talk to some friends, they'll talk to some accounts, but rarely do they get in front of somebody that actually can put all the pieces together for them at such an advanced, complicated level that can, map it all out to optimize it for them. Would you say that's been your experience as well?
Yeah, absolutely. And sometimes the obstacle that we run into is the existence of advisors that are in a very trusted relationship with the client, right? And it's not that they're not looking out for their client's best interest. They are, but they're limited to their area of knowledge and practice,
Yeah,
right? And that's where there's been some eye openers amongst our clients where they're like, hey, I thought I had this covered because these other people told me that we'd done everything that we can do, and now you're telling me there's something more, right?
right. Yeah.
And that's the engaging part of the conversation, why this works.
Yeah. And unfortunately, often they'll, within a bigger organization, they'll be referring it to somebody with the same, business card, but in the other department.
Right.
You, so yes, they're being looked after, but is the person that are being referred to necessarily the best person that can be helping? Or, what's that volume like? Because it takes a lot of time to really do this stuff in depth and do it properly to figure out all the right solutions and strategies for the client. So I agree with you that people have a plan. Everybody's had a plan to get to where they are, and they have a plan going forward, and they've talked to other professionals. But as you've probably seen in our dealings together, 9 out of 10 of business owners don't have all the pieces put together properly.
Right. Oh, for sure.
Yeah, good. Another thing that we should probably mention to our listeners is about some of the exotic or, you know, too good to be true ideas that are out there in the marketplace. And there's a number of, advanced tax planning individuals using different insurance strategies, such as, CI return of premium, often using international insurance companies or locations and strategies, and other ones with loans and reducing the assets in the company to zero. I'm gonna not with a derogatory intention, but I'm going to call them schemes because at the end of the day, if there isn't a business reason for entering into these things under the revised guard rules, CRA can come back and attack these. And just wanted to get your thoughts in terms of how you're, viewing what's out there in the Wild West and what the more conservative, approach that we're taking is in comparison.
Yeah, yeah, it's funny the way you worded that because the words that come out of my mouth is often too good to be true, followed up
Mm.
by schemes. Uh, and those have always made me nervous and in many ways over the years, probably we weren't focusing on these strategies as much as we are now because we were hearing about those, but not working with advisors that really actually have practical, real, solid solutions. And some of these schemes have even been, promoted by leading national CPA and law firms, and they've been aggressive, and we read about them in the newspaper when CRA ultimately shuts them down or tries to shut them down, and then we curiously watch it as it goes through the tax courts to see what's going to happen. And at the end of the day, there's just a bunch of people pointing fingers at each other,
Yeah.
and it's the client that's left holding the bag or the lack of the tax liability. So I guess the lack of the bag, as the case might be, but
Yeah.
and so 100% want to avoid that, and that's why
Me
working
too.
with Affinity yourself, we're just so pleased because these are well vetted strategies. They've been tested and discussed with CRA. We know that they're solid, and so that's fantastic, right? And our clients sleep well at night knowing that there aren't gray areas. We're not cutting corners,
Yeah.
and it's going to work out the way it's intended.
Yeah. I think, our conservative approach and that we implement with you and the clients of KWB is something that I refer to as sleep at night strategies, right? It's the use of the Income Tax Act, not the abuse of it. And, I've had tax lawyers that have taken these things to the Supreme, Court of Canada and won on advanced, creative stuff. But then the client died 3 months later because all the stress killed them. And then the lawyer says, never again. No, I'm just going to stick to conservative. Don't need to be aggressive or cute or too fancy because at the end of the day, that, whole experience with the CRA and tax court and all the legal fees that they have to pay, all the, tax they have to pay, all the interest they have to pay, and the penalties they have to pay, not even worth considering.
Yeah, yeah. Well, it's we always joke about that in the office because there's some tax lawyers out there that would love the challenge of taking something to court because that's with CR against CRA because that's what they
Get paid for.
sort of live for, right? And the notoriety that comes out of that. And I'm always like, well, that's the last place I want a client to end up. So let you
Yeah.
guys figure it out, and then we'll follow up later.
Yeah.
But that's again that's our perspective on it, and our clients appreciate that, and
Yeah.
again they
And
very comfortable.
yeah, and there are really good tax lawyers, and we know of one that we use together there in Edmonton that have the depth and the experience to really structure things well, so that it won't be attacked, by CRA, and that's great. But then there's others. It's like any profession, whether it's a doctor or accountant or tax lawyer or investment advisor or insurance advisor or advanced planner. There's ones that, really are top of the game leading in the country, and then there's other and are either aggressive in that area or conservative. And we're just looking for the conservative clients, not the aggressive ones. Fair to
Correct.
say? Yeah. Okay.
Yeah.
Good. Anyway, finally, any final thoughts that you have that you'd like to share in terms of what clients should be looking for as they're thinking, I have this covered, but maybe I don't have this covered. What would you share as parting words to our viewers?
Yeah, so I think a couple things. First of all, let's have the conversation, right? You don't know what you don't know. We don't know what we don't know, for that matter, right? We're all that way. So if somebody's bringing an opportunity like it, you owe it to yourself to explore it. I mean, you've created a successful business, you've accumulated a lot of wealth that was out of making a bunch of really good decisions. And in order to make a good decision, you need to be educated. And that's really what I see this process is educating our clients on what their existing or pending tax liability is, what are some of the additional opportunities that are available in planning to minimize that and to maximize their estate. And it's not about selling, right? I mean, I don't think you and I have ever sold anything or any plan to anybody.
You don't need to.
And we don't need to. That's exactly right. It's about educating. It's about sharing this knowledge, coming up with a really detailed plan that covers off all the bases, answers all the questions, and then the conclusion is usually quite obvious to the client, and in most cases, to go ahead. And in some cases, if they choose not to for whatever reason, that's okay.
Yeah.
Right.
Yeah. There's no pressure at all. And so would it be wiser to, put this off, or would you suggest people do it sooner and speak to anything that you think would be, beneficial for them either way?
Yeah, yeah. Well, I mean, if you want a tree to grow, and maybe depending on the time of year, the best day to plant the tree is probably today.
Yeah.
And you'll have the most growth and the most fruit coming off of that tree. So for sure, I mean, let's have these conversations now. It's a journey, right? It's not an immediate thing. It's not a quick thing. It does take some time and investment on our clients' parts in order to be fully educated. But everybody has felt quite enriched, both internally and will be financially if they choose to go ahead.
Yeah, I agree with you 100%. And that analogy, best time to plant a tree, always rings true. The the busyness that business owners have, though, of, they've got to get the team going, they got to get the sales, they got to, deal with this, security, internet, or sales or whatever of growing their business, HR. But from a time perspective, would you say this would be one of the best, highest uses of their time from a, return on their hours spent with us? If they do two, three meetings and have a clear picture of how they can save hundreds of thousands or millions, would that not be sort of the best use of their time?
Oh, yeah, 100%, Bruce. I mean, when you think of the ROI on those couple of hours, I mean, how much top line or bottom line can you add to your business by spending 2, 3, 4 hours? It is probably not, it's probably not in the hundreds of thousands or millions of dollars. I mean, if it is, then you're really
You
running a
got a
very,
good
very
business.
successful business.
And we should talk.
Right. But one of our sort of mantras at KWB is always, for the entrepreneur is make sure you're focused and you're working on your business and not just in your business. And often when we're talking about that, we are talking about the business itself. But with this is looking at your family and your overall wealth. It's that's the business,
Yeah.
not just a corporation. And this is one of those where you have to spend time working on yourself and on your family, and yeah, the ROI is immense.
Yeah, Darren, you made me think of another thing that we should probably share before we wrap up, and that is, we've talked about money not going to CRA or less money going to CRA, more going to family or to social causes. But what about me? Like, what's in it for me as a business owner? That's what typically a business owner will ask and say, well, what's in it for me? It's great for the kids or the family, whatever, but what about me? And I think it's worth mentioning that we actually have strategies that make it so that, a business owner and or their partner or spouse would benefit from these ideas and have more money to spend during their retirement in their lifetime. Would you agree?
Oh, for sure. And this isn't just about end of life planning. This is about the journey along the way. So
Yeah,
I fully agree with that. And then, you raised the point earlier. I mean, you just talk about the stress and sleeping at night, and just, the comfort in knowing that
it's all taken care of.
this problem's been solved, or possibly been solved,
Yeah,
or partially, not possibly, partially solved.
yeah.
That I think is invaluable in itself.
I agree. Yeah, I just had one last week, believe it or not. And this is Christmas week, like between Christmas and New Year's. And the net worth is approaching, 100 million. And there was not a will done by him or her. And we got their first wills done, skinny, simple wills. But the amount of headache and years in court with probate and probate fees even on that, we got solved, on the spot. But now we're doing all the advanced tax planning with the family trust, and the adult kids are in the business, and there's all of this, tens of millions going to CRA that we're problem solving, both for today and tomorrow for the whole entire family. So yeah, procrastination can be something that business owners do. I've seen it for whatever reason, that psychological, I don't want to think about death, or it's bad luck in some cultures, or whatever the reasons, or they're too busy, or they're not sure what they want to do or where to start. Just give us a call, and we're here to help, right?